Hi, I'm Shae Russell from ABC Bullion, and joining me today is Rick Rule, investor and speculator. Rick, how are you today?
Life is good, Shae. I hope it is for you as well.
Look, it is fantastic to be speaking with you again. Now, first of all, I want to start today off with a couple of cheeky questions. Now, everybody, almost everybody, introduces you as a commodities investing legend, myself included. Now, is this because you've survived numerous commodity bull and bear markets over the past few decades, or is it because hosts like myself are lazy and we're looking for the easiest thing to say?
Probably some of both. I have existed in commodity markets for 45 or 50 years. I'm not the kind of person who has gone from commodities to cannabis to crypto, flitting between sectors I didn't understand. It took me a long time to develop an understanding of the commodity sector. And in fairness, I've been a very successful investor in that space. The other thing is that unlike some people who do what I do as well as I do or better than I do, I tend to be reasonably good at giving interviews. So there are some people out there, they shall remain nameless, who I suspect are better investors in the commodity space than I, but they're lousy at giving interviews. So a cheeky answer to a cheeky question.
Well deserved. All right, now I'm going to move on to the tricky topic of taxation. Now, taxation in Australia right now is a very hot topic leading into our next federal election. However, now I don't want you to comment on Australian taxation issues, but Australia, Canada, and America are all facing the same problem, and that is that we've got very generous governments that have created very large deficits. So we're all collectively facing similar problems of what a younger generation is going to do with this debt. Tell me, do we owe the under 30s an apology? And who are we to blame? Governments or boomers?
Uh, yes, we owe the under 30s an apology, and we need to increase the ranks of people from whom the apology must be made. Governments, certainly, boomers, to be sure, and we'll talk about that more later, and young people themselves who demand that the fraud continues. Um, there is nobody blameless in this. Listen, Shae, government debt is really, particularly around entitlements, pensions, stuff like that, um, the consequence of old folks like me making ourselves all kinds of extravagant promises and giving ourselves all kinds of extravagant benefits and forgetting to pay for them. it's pretty simple. Even in this country, when you look at Social Security, the Social Security Trust Fund has been invested in 30-year treasuries. That's as though Aussies borrowed from their supers and went out on a drunk. They put in an IOU, of course, before they go to the tavern and buy the beer. But the IOU is secured by money that's already been spent on the beer. Um, this situation goes on until it doesn't. I know that sounds strange, but right now, your market and our market are sustained by confidence. Confidence that comes from the fact that we've enjoyed a benign economic climate really since 1981. So we've been trained to believe that stuff is going to get better and better and better. And many of us, too, believe that we have an entitlement. We have the right to cause other people to cough up the proceeds of their labor or their investments to further needs that we ourselves think of as important. I don't want to get into a discussion with you, Shae, about what economic or political priorities in Australia ought to be. I don't even want to get into that discussion with regards to the United States. I've got enough enemies as it is. But I would point out to you, Shae, that almost every poll in almost every major country that's ever been circulated, when people asked if they would pay tax if there was no threat of force or violence, in other words, if the government didn't have the ability to collect it, the overwhelming majority of people around the world have said they wouldn't pay tax. They would happily receive the benefit, but they wouldn't pay the tax. It's easy then to surmise from that statement that taxes, if left without enforcement, couldn't be collected, which is an easier way of saying that a truer definition of tax would be legal extortion. And the question becomes then for taxpayers, how do you feel about being the beneficiary of stolen property? And how do you feel about having that property stolen from you? So we have a moral issue, I think, around extortion. And then we have the practical economic issue around the fact that we are distributing resources through society, not accounting to how they're earned, but rather accounting to how they're voted. So we have something that is at once immoral and inefficient. I hope that was a cheeky enough answer too.
It was absolutely perfect. Thank you very much. Now I'm going to move into something a little bit more your wheelhouse. I want to talk about the cost of the energy transition or decarbonisation. You know, there's two different names being floated around for what is essentially the same thing. Now, an enormous amount of capital is being devoted to this globally, as well as an immense amount of resources. So first of all, how long do you see this transition taking to play out? But more importantly, have investors missed this story?
I don't think it's going to play out.
Ooh, controversial. Continue.
Yeah, I don't think it's going to play out. These, COP conference promises are like any other political promise. They're a bunch of grandstanding buffoons making proud statements that they absolutely positively know that they're not going to follow through on. One premise has been that carbon should be measured by national output. And so everybody says that China and India are horrific emitters. If you measure carbon output on a per capita basis, rather than on a national basis, what you find out is that their emissions, while growing, are fairly modest when you compare them with smaller countries like, say, Australia and Canada. The other thing is that it doesn't take into account historic carbon loadings, which are, of course, still in the atmosphere. So the idea that we're going to forward shift the blame for carbon on future generations when the majority of the damage has already been done is a little disingenuous. But probably more important, byproduct carbon is a function of economic processes that have raised the living standards of humankind dramatically for the last 50 years. And until the technology exists to fashion transfer, making good on the carbon promises will consign billions of people to poverty. I was going to say your green audience. I need to say, I think that green is the new pink. In the sort of environmental thing is often a whitewash for unabashed socialism. Given that socialism has failed in every color it's tried so far, it's putting on green cloth. But I think that we need to acknowledge, the green community needs to acknowledge that 1.2 billion people on Earth, Shae, have no access to electricity. None. Another 2 billion people on Earth experience energy poverty, which is to say that either the power that they receive is intermittent or it is unaffordable for them. All those people want to live like you and I. And mercifully for all of us, the advances that humankind has seen in the fortunes of the poorest of the poor over the last 30 years are the most dramatic in human history. And they generated a lot of carbon. The idea that the voter in India is going to improve the environment by allowing Americans not to atone for past emissions and constraining their own consumption of power when we don't constrain our own is naive. Similarly, the idea that you're going to convince Australians or Americans to reduce their standard of living or transfer trillions of dollars from their economies to emerging market economies when the economies are already so far in debt that they can't maintain popular domestic spending programs is a lie. A laughable lie, to be sure, but a lie. You know, a lot has been made in your country about coal and about how the fact that the coal industry is going the way of the dodo bird. Many of your listeners will not know the largest year worldwide for coal consumption was 2021. Right. The second largest was 2020. So while the world talks about alternatives, things like solar, stuff gets in the way of solar. One would be night, as an example. It's tough to rely on solar at night. Another would be in Germany, the reliance on solar in the far northern hemisphere where the sun doesn't shine. It turns out that in Germany, when they shut down their nuclear plant and they went to rely on solar where the sun doesn't shine, what they ended up having to do was quintuple their coal consumption. That's right, green Germany, green Angela, burns high ash, high sulfur, low quality US lignite coal, so her people don't freeze in the dark. When you get away from the rhetoric, what you see is that the pledges that have been made are lies. They're clearly unsustainable. Now, I'm not saying that trillions of dollars aren't going to be spent. They are. They're not going to solve the problem. And they won't primarily be spent to solve the problem. They will be spent because they're a politically feasible excuse for politicians to reward their favorite constituencies. They've used up every other possible excuse, and now, thankfully for them, they have global warming. I'm not suggesting, by the way, that we don't need to be concerned about global warming, that we don't need to be concerned about pumping all kinds of crap into the atmosphere and the water. I agree with all of that. I think that we should stop subsidizing pollution. But I also think that we need to realize that global warming is an excuse to continue producing massive amounts of hot air in legislatures around the world.
That is an incredible answer, Rick. I did not expect it. I did not see that one coming, but I really appreciate your honesty in that one. So now that we've got the fact that your take on the fact that the energy transition is likely to not ever happen, nonetheless, there are still going to be resources devoted to this. And as you've just pointed out, they are going to be politically favored resources. Mm-hmm. But let's talk about one of the resources that's a little bit of a touchy subject. And Australia is very well endowed with this one as well. Now, you have long been a fan of uranium before it was popular, actually when it was despised as a mineral would be the better answer. Tell me, why do you see uranium having a future?
It's interesting that partially as a consequence of the need for electricity that doesn't generate carbon, and partially because of Germany's catastrophic experience shutting down their nuclear fleet, that the political winds are blowing towards uranium for the first time in my life. I actually find it pleasant, if ironic, to be sort of on the right side of the screen trend. Listen, nuclear power, for whatever fault it has some advantages. It's the densest form of power on Earth. 1 kilo of uranium can generate so much power relative to coal or wind, which of course you can't store, or things like that, that it's an extremely efficient fuel. And there are countries that don't have Australia's vast resource endowment. I'm talking about places like Japan or Taiwan, where energy security is important to them, but they can't store enough liquefied natural gas or enough petroleum or enough coal to operate their economies. They remember the Arab embargo in the 1970s when they went without power. And for those countries, the political tendency towards energy sufficiency, energy security, gives them only one alternative: uranium. In other countries, there is a need for efficient baseload power. This isn't intermittent power like wind and solar, but really power that you can count on, high redundancy factors, 24 hours a day, 7 days a week. This is stuff like large-scale hydro, which is damaging to the environment too. Coal, things like that. The most reliable baseload source of energy relative to output and carbon production is nuclear. And ironically, large parts of the green community, including the former founder of Greenpeace, are coming to that conclusion. It is interesting for me to see the political winds change in Japan. The Japanese people felt correctly, I believe, that they had been lied to by the political establishment and the power establishment around the efficacy of some nuclear power plants in Japan. And the consequence of that was that 8 years ago, while the big thinkers in Japan, the corporate interests and the government, supported uranium, the people didn't. Much more recent polls, taking into account the Japanese problem with particulate pollution from burning oil, burning natural gas, and burning coal, means that more than half the people in Japan now favor the restart of the Japanese nuclear fleet. A sea change in opinion, I would suggest, in 8 years. One born, of course, by necessity, but a sea change nonetheless. It's ironic that somebody who wouldn't necessarily be identified with extractive industries or conservative politics, Microsoft founder Bill Gates, who is very interested in the environment, is proposing with his own money to build a nuclear plant, ironically on the site of a former coal mine in Kemmerer, Wyoming. And so for the first time in my life, I think, Shae, I seem to be on the right side of a popular political debate. What I mean on the right side, I'm saying on the side that's gaining public favor. I'm actually kind of uncomfortable with it, to be honest.
It's not often that the mainstream comes and sees your view.
No, it isn't. It isn't.
All right. Well, while we're talking about uranium, which may be more sought after in the future, there are some much needed metals now that companies are looking for. Now, I'm fresh off the back of the Melbourne Mining Club meeting last week, and the topics of conversation were that we need more copper and we need more nickel. And interestingly, they pointed out that gold and coking coal were probably their next two ones that the world needed more of. Tell me, does this back up your view, or do you have a different view that there are other minerals and metals that we need?
Yes and yes. I think almost no matter what we do, 5 years from now, we're going to be short of copper.
5 years?
Because over the last 20 years or 30 years, we haven't invested enough in copper exploration, copper development, copper mine construction. We're living off mines, Shae, that are long of tooth. They were discovered in the 50s and 60s, built in the 70s or 80s. Great big mines. Bingham Canyon in the US, 110 years old. Chuquicamata, 100 years old. Grasberg, 40 years old. I mean, the only newcomer on the block probably is Olympic Dam, of big ones. What that means is that as a society, we are living on these wonderful old legacy mines, but mines that are peaking and beginning their inevitable decline. And we don't have very much in the weeds to back them up. So almost no matter what we do, other than having a recession or a depression, which kiboshes demand, we're going to have copper shortages in the next 5 years. Nickel is going to be an interesting topic. We have a reasonable supply of low quality, low price nickel from the Philippines and from Indonesia, but the environmental degradation that mining those laterites in tropical surroundings causes is becoming unacceptable, even in the Philippines and in Indonesia, where they formerly tolerated them. So with regards to nickel, what we're going to need, well, the cost of producing nickel is going to increase. The excitement you see in Australian equity markets and Canadian markets around a sulfide nickel deposit, a nickel deposit that isn't environmentally degrading and doesn't require as much energy to produce, will tell you something about what the industry thinks is going to happen to nickel prices and nickel demand in the next 5 years. The nickel rush in Western Australia, the incredible success of Chalice, a 30-fold run, tells you something about the fact that I'm not the only guy out there who's a sulfide nickel bull. The writing is on the wall for that. Rare earths are going to be interesting. The last time through for rare earths 10 years ago, I sort of laughed about it, missed a hell of a stock run, but it turns out I was right. Rare earths aren't that rare, Shae. The reason that they're suddenly in focus is really twofold. One, there's a nervousness that the Chinese will attempt to blockade access by Western fabricators from rare earths because they control so much rare earths production. So there's a geopolitical concern around rare earths. The second, though, the reason that the Chinese are able to do that is because they're such efficient producers. We haven't found rare earths because we haven't looked for them. We haven't looked for them because they've been too cheap. That's changing too. They're produced in far Western China in ways that have been catastrophically environmentally destructive. And the Chinese people and the Chinese government too now appear to be willing to mine in a much more responsible manner, which means that the Chinese cost competitive advantage begins to go away. That will mean that the Chinese won't need to embargo the West to see the price go up. They will just need to reflect the costs of mining the material responsibly. And I think over the next 5 years that you're going to see an increasing appetite for exploration around rare earths. We're going to find it too. It's going to take us a while because we haven't been looking for it for 30 years. We don't know where. We don't know how. We don't know who. But those are questions that are going to be answered because as we use more and more microcircuitry in an electric world, and the cost of producing this stuff in China goes up, and perhaps as geopolitical concerns around Chinese controls go up, the price of these rare earths, the price of all this stuff that I can't pronounce or spell, is going to go up. I'm actually, with my own money, buying some of this stuff now, physically. I don't know how to find it. I suspect it'll be selling for more later. It doesn't cost very much to store because it costs so much to buy. You can't store stuff like copper and aluminum too well, because the unit prices are too low. It doesn't store well economically. But there are several of these 4-syllable materials that sell for enough money relative to the size of the volume that you can buy them and store them, which is precisely what I'm doing with my own money. While I scramble like mad to learn more about the exploration processes and a little bit about the processing processes around rare earths. But I agree with your thesis. I think that the legitimate part of electrification, which is to say improving the living standards of the poorest 3 billion people on Earth, will drive demand for the electric economy. I think, too, the political trend and social trend that you've noted towards decarbonization will make vast amounts of money available, most of it to be wasted, misspent, but some of it to be spent intelligently. Every now and then somebody accidentally does the right thing in politics. And I think that the impact of that on the mining industry in general and the mining industry in Australia in particular is going to be very exciting. And it's going to be exciting for a long time, I think. We will be looking for cobalt deposits and nickel deposits and copper deposits, uranium deposits, rare earth deposits for a very long time. Will it bust eventually? Of course. But I suspect that we'll have a hell of a decade.
That is a very exciting trend that I hope everybody keeps their eye on. Now, I'm going to bring it back to what the core of this channel is. And obviously, we are a bullion investing channel. So thank you very much for indulging the rock nerd side of me and letting me talk all fun things about the commodities sector. But I do need to get to the fun stuff, and that's talking about gold and silver. Now, first and foremost, this is actually a question that I have been asked repeatedly by listeners of ABC Bullion. And they want to know, what is the ideal gold to silver ratio to have in their portfolio?
All investors want one size fits all answers, and there aren't any. It depends on the investor. Traditionally, gold bullion it's been a form of insurance, Shae. You have preserved your purchasing power in circumstances where the purchasing power in other savings and investment classes gets degraded. So you would buy gold if you believed that the purchasing power of the Australian dollar was going to decline and the value of your savings products, your super, your bank deposits, your bonds was going to decrease. silver has traditionally been something different. Silver has been more of an investment or a speculation than an insurance product. And if you observe the last two precious metals bull markets that I've lived through, 1970 to 1981, 2000 to 2011, what you will note, among other things, is that those bull markets are led by gold because the fear buyers first. But leadership changes in the middle of those bull markets when the momentum established by gold puts the value of the narrative firmly in the generalist mind. Then silver starts to move. It moves both because its lower unit value allows poorer participants, as an example, the Indian peasantry, poor people in China, to participate where they couldn't afford to buy a meaningful amount of gold. They can't afford to buy a meaningful amount of silver. But it also happens because silver is traditionally more volatile. And people who are buying for one of the two primary investment motivations, the two are, of course, greed and fear. People who are buying from a greed point of view love the upside volatility in the silver market that occurs in the second half of precious metals bull markets. So the answer really depends on who you are. And I must admit, I'm of mixed minds. I believe that the set of circumstances that we see in front of us in the world today should cause anybody who is competent in arithmetic to be concerned about the purchasing power of their savings denominated in fiat currencies, be it the Australian dollar or the US dollar. So I'm attracted to gold. I'm attracted to gold stocks because, ironically, nobody likes them. And I always feel comfortable when I'm alone. But I like them too because in the way that I value them, which is the net present value of future cash flows at today's commodity prices. That is to say, net present value relative to enterprise value, the market capitalization plus debt minus cash. These companies at current commodity prices, their cash flows are the cheapest that they've been in my career. So I think that the commodity is going to go up, and I think the commodity prices, producers are cheap. This is a wonderful circumstance for me. I find myself actually in the position where I own a reasonable amount of gold, a reasonable amount of gold stocks, that I'm hoping the price goes lower because I'd like to buy more. And if there's an asset that you want, you'd like to see it cheaper as opposed to more expensive. That gets me an awful lot of hate in the comments on shows like yours. But I've always felt that the idea that something that I wanted to buy more of was becoming cheaper was a good thing. I have the courage of my convictions. Moving on to silver, Shae, I'm at the point in my career where I don't actually need to speculate, but I can't help myself. What I have seen is that the most volatile asset class in the natural resources space, with the possible exception of junior uraniums, but the most consistently volatile are silver equities, because there isn't enough market capitalization in the legitimate silver equity space to handle the capital that comes into them during precious metals bull markets. I've had numerous experiences with this in my career. Silver Standard from 72 cents to $45. Pan American, 50 cents to $40. Going back before I was cognizant of it in my first bull market, Coeur d'Alene from 10 cents to $65. The upside that you see in the silver equities when the silver market catches on fire is really, truly odd. So despite the fact that I don't need to speculate, given that this may be the last precious metal super cycle of my career, I just can't not participate in the silver equities. And the fact that they're dead, the fact that not only do they bore people, but that people hate them, is particularly attractive. You may remember earlier in the year, the so-called silver squeeze.
Yes.
And I must say, I was surprised by the strength of it. I was surprised that we didn't just run out of retail product, at ABC or places like that. For a while, all those young folks on Twitter actually bought so much silver that even Sprott had trouble getting institutional quantities of silver. We actually did have a legitimate, albeit short-term, silver squeeze. But the real squeeze, Shae, comes very differently. It comes from reversion to mean. It comes from arithmetic, not narrative. In the US, I don't know the Australian numbers, but in the US, precious metals and precious metals equities comprise 0.5% of total savings and investment assets in the country. The 3-decade mean is 1.5%. And I believe that a combination of quantitative easing, which, as you know, I call counterfeiting, debt and deficits, and negative real interest rates will, over the next 5 years, cause demand for precious metals and precious metals assets to at least return to mean. If they return to mean, it means that demand will triple. It means that the silver squeeze will not come from a young wage earner on his or her cell phone, but rather will come from the AMP. It'll come from Temasek. It'll come from the Harvard University endowment. If we have reversion to mean, it means that the market share of precious metals and precious metals equities will triple. I actually think that they will do more than revert to mean, but I don't need for them to do more than return to mean. If they merely return to mean, you will see what the real gold squeeze looks like. You'll see what the real silver squeeze looks like, and you'll see, I think, not merely a meaningful, but a surprising response in the equities. Is this going to happen over a period of time that will keep your most rabid listeners happy? Probably not. You know, there are many people who adopt the narrative and they want it to take place over a long weekend. And that isn't the way markets work. But, you know, Shae, in the past, you and I have talked a lot about the Barron's Gold Mining Index. When people look at that chart and they look at the anatomy of prior bull markets, what they see is that although the market doesn't give you what you would like to expect when you want to expect it, it is very common over the course of a precious metals bull market to see the index go up 700 or 800%. It is not uncommon to see it go up 100% in a 12-month time frame. The point of that is that although it can bore you in the 2 or 3 years that it isn't moving or is moving down or is in malaise, from a time value of money standpoint, if you're in place for the market when the market moves, the rent it pays you overcomes almost any discount that you might want to charge yourself waiting for it to wait.
I just want to draw on something you said in there. You called this the last precious metals super cycle of your career. Tell me, what identifying factors do you use to define a precious metals super cycle?
I think that we're in a unique circumstance right now. I think that we're coming out of a 40-year cycle that featured rising bond prices and lower interest rates. And I don't think that you can take interest rates meaningfully below zero. So I believe that if we are not at the end of the bond cycle, we are much closer to the end of the bond cycle than to the beginning. And I think that ultimately bonds and gold move countercyclically. Bonds are a good time investment when they're cutting the interest rate. They're raising the value of existing cash flow streams. And if the expectation of the future is benign interest rates and benign economic conditions, nobody's afraid of anything, so nobody buys gold. In a circumstance now where the arithmetic around debt instruments is so bad, yet the prices of debt are still so strong, I think we're coming in for a sea change. Think about yourself, Shae, as the holder of a U.S. 10-year treasury. I know you wouldn't be, but put yourself in that shoe anyway. You loan the U.S. government, which is an increasingly bad credit because of debt and deficits, money for 10 years. And they promise to pay, which they do, absolutely, pay you 1.5%. So far, so good. But they pay you in a currency which they, not some cranky old libertarian, they say is depreciating in value by 6.5% a year. That means that the US government absolutely positively guarantees that they're going to cost you 5% a year in purchasing power compounded. This is the first promise in my lifetime they're likely to keep, other than their attempt to send me to Vietnam, neither of which I had much interest in. So I believe that over the next couple of years, the lessons that we've learned over the last 40 years, which is to say that life is benign, government is good, the Fed is your friend, there is a Fed put, that there's a fat guy in red that comes down your chimney this time of year. All these things, I think, are going to begin to fade in prominence against the arithmetic of getting paid 1.5% in a currency that's depreciating by 6.5% a year. The consequence of that doesn't need to be a replay of the 1970s, which saw gold go from $35 an ounce to $850 an ounce, and saw the interest rate go from 4.5% to 15.5%. It doesn't need to be that dramatic. It is estimated, by the way, then that the market share of precious metals and precious metals related securities in the United States was between 8 and 9%, rather than 0.5%. All I'm suggesting is that the combination of the end of the benign bond era from 1982 to 2022 and quantitative easing and debt and deficits and negative real interest rates will cause the market share of precious metals and precious metals related securities to revert to mean. And if that happens, demand triples and supply can't.
Now, I have one final question before we wrap up today. And it's another question that I receive from people who watch this channel. It is, what is the one thing an investor should know when they start out on their investing journey?
Well, that's a tough question. I think investors need to know that money is made investing on the delta between price and value. Most investors pay slavish attention to the price of something, the price of a stock. It's $1 a share. What good is that knowledge if you don't have an opinion as to what it's worth? So I think that money is made investing ultimately on the delta between price and value, and also made in a sense in terms of forecasting what might cause that value to occur, over what period of time might it occur, and what is the probability of that occurrence. Many people confuse themselves too much with investing, but really it's a function of buying a good asset at a fair price and letting time take its course. The second thing I think investors need to know is that time does need to take its course. The eighth wonder of the world, and the first wonder of the world around investing, is compounding. And compounding takes time. The great fortunes of the world, Buffett, fortunes like that, took place over very, very, very long periods of time. If you get out your calculator, programmable calculator, and you take a fairly unremarkable rate of return, say 7%, you take 100 times, 107 times 107 times 107 times 107 times 107. The number that you get in the out years is incredible. But that supposes that you held the investment to see that compounding occur. It's ironic that when I was a young man, I was very impatient. When I had lots of time on Earth, I wanted my so-called investments to perform in 3 months or 4 months. Now that I have substantially less time left on Earth, I've become much more patient. It isn't that I wouldn't like to see immediate gratification. It's just that I've come to understand that what I want doesn't matter much. And I need to adjust my expectations with what I might be able to reasonably expect to occur. So I invest now in sort of 5 or 6 year chunks. I'm often, as you know, early, but I'm usually right. And I've learned with time, I get to ask myself questions where the answer begins with when. Most other people ask themselves investing questions where the answer begins with if. And when is a much more certain outcome than if. I've come to prefer when questions to if questions. So in answer to your question, not one, but two. One, Money is made on the difference between price and value, which presupposes that you can establish what you think is fair value, because price is easy to find. And the second is make time on your side.
That is an incredible answer, and I hope people take something away from that. Now, before we wrap up today, I do believe that you like to make an offer to people watching your videos regarding ranking their commodity portfolios. Tell me, are you still making that very generous offer?
I am. I've had so much fun doing it. I've had thousands and thousands of conversations, some in rural New Zealand accents that I can't understand, but that's okay. The offer goes like this. If you've liked what you've heard so far, but you want a more specific discussion with me around your own stocks, have it. Go to a website, ruleinvestmentmedia.com, enter your natural resource stocks. Please no crypto, please no pot stocks, please no tech stocks. Keep an old man to what he does well. I'll rank your portfolio 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues where I think my comments might have value. By the way, I got an inbound request today from a young woman named Shae Russell, which I appreciate. Sidebar. If you mention charts, I will send you the Barron's Gold Mining Index, not because I'm any expert in technical analysis, but rather because if you examine the 2 prior bull markets in precious metals, I think you'll get a better sense of the anatomy of this one. I think it'll make you a better investor and speculator. And for those who care, and every Australian should care, I'll include a 100-year commodity chart, which talks about the prices of commodities relative to other asset classes. The thing that I learned that I can do now, because I'm no longer a broker, is if people care, they can add the comment private placements. And if they're accredited, I can simply tell them what private placements I'm doing. Since I don't get paid commissions anymore, it turns out that I'm covered by commercial freedom of speech because I'm not paid for this. I'm giving it away. It's amazing that I had to take a vow of poverty to get out from under the regulatory morass, but that's what I've done. So ruleinvestmentmedia.com, I'll rank your stocks. If you mention charts, I'll include charts. If you care what I'm doing in private placements and you're an accredited investor, write down private placements too. Have it all.
Look, that is a fantastic offer. And as Rick did just cheekily mention, I absolutely ran myself through the gauntlet last night just to get a take on what the user experience is. And I was pleasantly surprised. All right, Rick, look, I've just got to say that is all I've got time for today. I have thoroughly enjoyed today's conversation. You are also ABC Bullion's final guest for the year. So thank you very much for closing out 2021. And I look forward to speaking with you in 2022.
I look forward to that as well. If COVID subsides, I look forward to ABC buying me a beer down there.
I absolutely promise I will buy you a beer and maybe even something higher up the shelf.
I'm almost certain that you will, Shae. Thank you.
Thanks, Rick.
Great.